In this video, I'm going to show you how to accumulate more ICP coins without ever dipping into your salary again. Hello and welcome. My name's Jack and I've been living my childhood dream of travelling full time for 5 years and counting. I make videos that give you investing information that you can actually use to make real money and avoid those horrible losses. Hit subscribe now and I'll help you stay on the right side of the market consistently over time. Subscribe. In this video, I'm going to show you how I grow my portfolio without ever investing directly in altcoins, right? In fact, I haven't invested in altcoins from my salary since December of 2020, except for Bitcoin and the S&P 500. And I'm going to show you how you can continue to grow your altcoin portfolio without actually risking your salary. So let's talk about it. This is a good one. So how do you actually go about doing this then? Well, this strategy is about accumulating units. And the whole theory of this is basically taking profit when the herd is greedy and buying when the herd is fearful. Buying low, selling high, basically, which sounds very simple, but in reality, most people really struggle with this. So in this video, I'm going to show you how you could do this in a way that sort of keeps your emotions out of it. And this is a strategy I personally use for years to accumulate units, both of stocks and of altcoins. So let's talk about it. So the way I do this to sort of keep my emotions out of it is two things. Number one, I target key pivot points on the chart. Okay, so a pivot point, guys, is a level on the chart the price has consistently reacted to in a big way. So if we're looking at this chart of ICP, and you could do this for any altcoin, there's two key levels that really stand out to me here, right? The first one is right here, which is basically at that $6 to $7.50 level. The next one here is this local high that we made in April of last year, because you can see you've had multiple reactions at that level. So you've got two levels here, and you see we've picked these levels because the price has reacted to it multiple times. And what we look to do when we see this, guys, is we look to take profit at these levels. And I'm not telling you to sell your full bag. I'm saying that I take 5, 10, 15, 20% out at these high risk levels, waiting to rebuy back low. Okay, because what we see here, if we look at the previous history, guys, look, let's say we're taking this first level here, this sort of $6 to $8 level. Look what happens normally when we get here, right? We rejected it, rejected it, rejected it. See the way price quite often responds at this level? That gives us a good indication that it's a good place to take some profit off the table. You learned something new in this video? Take 1 second right now to hit subscribe so I can help you in the future. Next up then is this level here, the higher one here. See the way it was level in the past? Once price returned there, look what happened. You got a rejection, you got a rejection, you got a rejection. So each time you were able to sell up here and rebuy at the dip. And this isn't rocket science, guys. It really isn't. And if you struggle to mark these points on your chart, there is another way you can actually do this, and that is by using the EMA band, right? So if we go down to the daily time frame and we put the EMA band on the screen, let me just get rid of these boxes. And yeah, so if we put the EMA band on our screen here, and basically this is just the EMA 21 and the EMA 34 combined into a sort of band, okay? And what we look to do is that whenever the price gets really overextended, gets really far away from this EMA band, we simply take out profit, 5, 10, 15%, waiting for the pullback. Because what you see, guys, if we look at the last rally, you could see whenever price gets too far overextended above this EMA band, it always comes back. This EMA band acts like a magnet when you're in an uptrend or a downtrend. And you can see consistently, whenever the price gets too far away from it, it always comes back. You can see again and again, it just keeps coming back to the magnet. And equally, in a downtrend, you can see the same thing. So what we do is that whenever the price gets really far above, we just start DCAing out of our position. And I'm not saying sell your full bag. I'm saying sell 5, 10, 15, 20%, whatever you want, so you have capital ready to deploy when you get that pullback. Because I'm not joking you guys, it is such a good feeling when everyone else is all fearful and crying for their mama when you get one of those nasty 30% pullbacks. But when you're sitting there with your cash ready to deploy, buying up all of that fear, it's a really good feeling. And not just a good feeling, it makes money, it makes bank, you know. So to summarize then, what I do is I take profit at key pivot points on the higher time frames, and also when the price gets very overextended from the EMA band, right? To buy then, to re-enter, what I do is the same but in the opposite. So one way you could do it is just buying the retest of the EMA band, because you will see here that most times it does always come back pretty much exactly to the EMA band if we look at the chart here. Or you can also do to key pivot points, but in uptrends generally I find just buying at the EMA band is the best, because you don't always get a huge pullback. So if we just go back and look at some of the results from doing this, so let's start for this cycle, right? So let's go October 2023, right? Let's say you were selling here, DCing out of your position, 5% here, 5% there, and then you were waiting for your pullback back here. Let's say you didn't catch the top, but say you just got about here. You were able to get an extra 16% more units than you had previously. Again, if you were kind of selling around this area, let's say you didn't catch the top, but let's say you sold like here, again, you were able to catch an extra 13% more units. If you sold here, again, you were able to catch an extra 40% more units. And you can see again and again this happens, and it's not just this cycle, you will see it happens all the time. Look, here's another example here where you went way too far above the EMA band, you were sort of selling out here, and then boom, there's an extra 17% more units. And you can do this, guys, with any altcoin or any stock as well. And this, guys, is not even trading, this is portfolio management. This is keeping yourself on the right side of the market, making sure you're moving stuff around, making sure you're rotating your capital, making sure you've always got cash ready to deploy when the risk is low. So I'm going to leave this video here. It has been a pleasure presenting this video to you. If you got some value from it, please do consider hitting the subscribe button, click the notification bell, and I will see you in the next one. Bye bye.